For more on what this means for the crypto universe, we've got blockchain capital partner Spencer Bogart, who joins us today from San Francisco. Hi, Spencer.
Hey, thanks for having me.
Had the barrier for institutional investment in Bitcoin or Bitcoin futures, I guess, in this example, been the lack of a trading desk at the big banks? It seems that there are other issues wrapped in. And I ask you this because this is being touted as a big step. Is it really?
Absolutely. It's definitely a big step. I mean, I don't think it's a perfect solution that all of a sudden now just opens the floodgates to the institutionalization of Bitcoin. But I think, as Bob pointed out in the segment, I mean, listen, first we had the futures contracts roll out, so some robust derivative products. Now we're seeing large banks roll out trading desks. I mean, particularly when it's Goldman Sachs, I'm going to expect other banks will follow as well. And they're going to follow not just because it's Goldman Sachs, and that's what a lot of banks do, is follow what Goldman does, but because this market is so large that you can't ignore it anymore. I mean, I'm sure that most of these banks have heard about the numbers or have seen the numbers that companies like Coinbase and Binance are putting up, and there's a real risk that some of those companies could overtake some of Wall Street's biggest banks if they don't get in the market.
But in terms of institutional investment, I mean, okay, let's say this is a good first step. What's the next big problem that needs to be solved?
Sure. So, I mean, I think that Bob hinted at it in the segment, which is custody. Right? So, I mean, right now we have Goldman rolling out a trading desk that will only be touching derivative products. But longer term, I can imagine that they're going to be embracing trading of the underlying product, right? The physical Bitcoin. And so, you know, I think a big piece of solving that puzzle is going to be custody.
And who's working on that problem right now?
There's so many companies in the space. Like, really, I think that this became a very well-known problem over the course of 2017, and now there's probably a dozen credible players in the space that are going after it, including companies like Coinbase and BitGo.
So in terms of your forecast for where Bitcoin could go now, Spencer, if things were to remain the same in terms of who is able to invest in Bitcoin, let's say institutions are where they are right now for 2018, where does Bitcoin go? And then if the custody problem is solved, then where do you think Bitcoin goes?
Sure. So listen, at Blockchain Capital, we're a venture firm, so we're thinking about longer-term horizons. So if you ask me what's going to happen to the price of Bitcoin over any 1, 3, or 5-year span here, what I'm thinking about is one thing. Is there going to be more buyers than sellers? And I think the answer is yes. And we can really easily think about this problem if we think there's two main groups. On one hand, we have hodlers, people who own some Bitcoin. On the other hand, we have people who don't yet own any Bitcoin. And the question is the flow going to be greater from hodlers to non-hodlers, or from non-hodlers to hodlers? And my guess is that there's going to be way more people that will be newly buying Bitcoin for the first time. And they're going to be doing that through apps like Robinhood that have rolled out crypto trading, through apps like Square, and through some of the biggest platforms like Coinbase.
All right, Spencer, thanks for your analysis.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.